Howard Lindzan is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions and securities discussed in this podcast.
Welcome, everybody, to another episode of Lindzanity. Today I have a really good friend here in Phoenix, Steven Schwarz. He's not a legend because it's such a boring, I think, stupid industry that 99% of Phoenix people are in, called commercial real estate. But Steven is my go-to person that I ask dumb questions, invest with. He invests with me. And today we're going to talk about commercial real estate globally, but also Phoenix and how Wework has changed the business as well. Steve Schwarz.
Yeah.
You're on the podcast.
All right, here we go.
This is as high-tech as you've ever been, isn't it?
For sure.
All right. So, you're white Caucasian? Where are you from?
Atlanta, Georgia.
All right. So you're
Southern
Atlanta.
boy.
You are in the commercial real estate business. Is that
Correct.
what I would say?
Yep.
And you run a company called ViaWest.
Yes,
Did I pronounce that correctly?
you did.
All right.
We say ViaWest Group, but you can stick with ViaWest.
Is it true? This is my estimate. I don't have facts to back this up. I would say 99% of people in Phoenix are commercial real estate agents. Is that true? Or is that
Between residential and commercial, I think it's about right.
Unbelievable.
Yeah.
So when did you get the bug to do commercial real estate?
I was 23. And
How old are you now?
49.
So 26 years in the commercial real estate agent.
Yep.
And what was it? You just liked building blocks?
Well, actually, I was working for a bank, and I was doing rotations.
Phoenix or?
Atlanta, Georgia, SunTrust.
Okay.
And
Great bank.
Yeah, good bank, except for their motto was "Don't lend money to people that need it." So I was in.
Isn't that every bank?
Right. So I was in the.
That is their motto.
It was pretty much back then. It was the motto.
And they're like a Georgia bank or a
They're Atlanta based, but
Okay.
they're pseudo regional now. They just merged with one
Huge
of the big
bank.
PNC or something
Yeah.
like that. But and so I was just doing rotations through different departments. Ended up in the real estate finance group and started lending money to developers and investors and
Around the country or?
no, mostly regional, mostly Georgia and maybe a little Florida. But
Okay, so what year was this?
This was 93.
So it was a good market.
It was starting to be a good market.
Yeah.
I mean, the late 80s, early 90s were brutal.
Yeah.
And then people were starting to get back into business.
Rates were coming down.
Yeah.
War's over.
Yep.
Atlanta's cool place.
Atlanta was kicking back into gear.
Yeah. And so why'd you move to Phoenix?
Chased a girl who's now my wife.
She is your wife?
She's my wife. Yeah. She was
I've
in
met
law
her.
school in Austin. She got an offer out here, and
She was at UT Law School?
she was at UT Law School.
Okay.
And I wanted to switch. I realized that developers were making more money and having more fun than the lenders, so I
So you switched
decided
sides.
to switch sides. So I came out here and hunted for a development job.
And where did you land?
The Houston company.
Are they a big company? Are they a national
They were
company?
a big, well-known sort of regional kind of company back then. They're still sort of around.
And so what's the difference on the sides? So is ViaWest development or?
We're development and investment and property management. We're integrated.
Are most integrated or no?
No,
Okay.
not really.
Okay. So how many people today at ViaWest?
About 50.
Yeah. So you got, and mainly Southwest?
Yeah, mainly Southwest.
So I think, well, you own the best building in the city too, which is exciting.
I like to believe that, yeah.
So Steven and his partner, they own Biltmore Center, which I actually was a tenant of at the top in 2000. And I was in a lot of trouble. That was the one time they say I didn't know you, but that was like, we had just signed a long-term lease. The market crashed. My partner was crazy. Harold, you remember Harold Rubinson? Do you know Harold?
No.
And we had just signed like a 5-year lease. And and back then, your building was the most expensive building in town. And I had to go negotiate with like some endowment who just took pity on me.
Yeah, it was a Florida
It's a
pension
miracle.
fund. Yeah.
It was a Florida pension.
Yep.
But it was a Harvard guy running it, and he knew me.
Okay.
And somehow because it wasn't the real estate crisis, it was just a stock market crisis.
You weren't the only one. You're one of the few.
I was
that was
one of
complaining.
the few.
Right.
If this had happened in 2008, I was fucked.
Yeah, or if you were in San Francisco.
Yes.
Yeah.
But I wasn't in San Francisco.
Exactly.
This was the NASDAQ crash.
Right.
So somehow, because it was the best unit in that building, the top floor in the northern, the one facing.
Oh, really?
Yeah,
Good space, man.
It was the
Killer
the whole
views.
floor.
Right.
It was I'll never have an office like that. And back
I'll
then,
let you come visit.
Back then, like a 17-inch monitor weighed 700 pounds. So I'm saying your whole office was filled with one monitor.
Right.
That weighed. So anyway, so Biltmore Center.
Yep.
How did you? Because it is the best. 3 buildings?
It's 3 buildings, yeah.
And
but
Phoenix is a big city, and it's not the biggest building, but I think it's like it was the highest numbers.
It's primo, yeah. I mean, it's 635,000 square feet, and it's so it's a big project.
In terms of Phoenix, is that like a size-wise?
That's big.
Top 10?
As a project, it's probably somewhere in that range.
So northwest corner of, I think, the best neighborhood in the city, 24th and Camelback, right by the Biltmore. I don't live that far. Obviously, all the sexy money is Scottsdale.
No, the sexy money now is Tempe.
Oh, Tempe.
It's changed.
On the lake?
Changed. Yeah, on the lake is probably the biggest rents in the market. And then,
because of the school?
It's partially, but I think just really because of drawing from the freeways and drawing from the Southeast Valley and Scottsdale.
Okay. So they did a good job. I remember the LifeLock went in there, one of the first buildings.
Yeah, I mean, those things originally, and they were built in kind of, originally kind of tough. Yeah,
they were built in like
and
2008?
Yeah, there were some that were built like 05, 06, and then a couple that followed in 07, 08. So. And
do you do anything down there?
Yeah, in the we don't have anything right there, but around the area for sure.
Okay, so you bought Biltmore Center when?
Summer 15.
And you've done a ton of work.
Done a ton of work.
And what is the Phoenix market like? 2019, we're in May. Rates are low.
Right.
What is the Phoenix market like? Just take as much time as you want, or
yeah.
Like how
I can go on forever, but the Phoenix market is really strong right now. I mean, we are very well situated nationally. Cost of living, proximity to California is obviously incredibly beneficial because you got all these companies that regulatory issues and taxes, et cetera, that would rather.
And you're a conservative guy. For you to say is interesting to me. Okay,
yeah,
keep going.
And so we've stayed in check. The rub on Phoenix in the past is it's a boom bust market.
Yes,
and we've diversified our economy significantly.
Unbelievably.
Yeah.
I was just talking to the Economic Council and the governor. I can't believe it.
No, it's crazy. I mean, you go back to 2007 and look at the economy.
We knew it.
But you knew it. Well, 10% of
I was in your building. It
yeah.
was a joke. Everybody was a commercial real estate agent.
And it was frothy. It was crazy. And 10% of the employment numbers were all related to real estate.
Okay.
So if you have a softening in the economy and real estate falls, the whole economy falls apart.
Yeah.
Right? Now we're sub 6%. So, which is very normal.
Here's what I sense in the town. It's unbelievably, there's great bids for the right things. There's just a lot of crap on the market. Does that make sense to you?
Well, it depends on what it is. So apartments, you got people lining up to buy
I'm saying
apartments.
homes between $800K and $2 million. So I don't know a commercial, and you'll fill me in on that. What I noticed when we just bought a home is, oh my God, there was like something seeing massively undervalued. Right. Like massively, but because dollars per square, when Ellen was looking at stuff, dollars per square foot, she couldn't get it over her head that we were paying over dollars per square foot. And I was trying to say, who cares about dollars square foot when the whole neighborhood's undervalued versus everything else, which was good dollars per square foot, but shit.
Right.
So that's why I see in the real estate here.
Yeah.
So I think there's opportunity. Tell me commercial, how that's different.
So commercial, there's a couple of product types that are on fire, apartments and industrial. If you put something on the market, even if it's not great stuff, you'll get lots of bids, aggressive pricing. Retail no one loves retail anymore for obvious reasons.
But can it get all repurposed? Like even 24th and Camelback, they're putting in a Lifetime Fit. Like
they I mean, if you have a great location,
if you have a great location, they got to repurpose the whole thing.
Right. If you have a great location, you can do it. If you're a little bit off the location, there's only so much you can do with it.
Yeah.
The office doesn't really want to go there. Industrial, doesn't work for industrial.
And it's maybe not zoned for condos yet.
Yeah, and zoning's an issue. And then, there's only so many apartments and condos you can build, even though we seem to be building a lot. Yeah. And, but people are converting to mini storage. People are converting to some of these bigger boxes to all kinds of things. It can be churches. It can be.
You're actively buying.
We're actively buying and we're selling.
Looking.
Yeah.
You're always actively buying, but you're not scared of this market here.
We're choosy. Look, the advantage Phoenix has from a capital standpoint is you can still buy here for significantly below replacement cost if you're buying office.
And that's the metric that matters?
It matters a lot because no one can go build and compete with you, right? So if you can buy something for $250 a foot and to build it would cost you $320 in the same area,
you got to buy it.
No one's really going to come build until the rents are there.
Right.
So that's not the same thing in other markets. If you go to Denver and Austin and a lot of the other markets we compete with, their prices are higher than replacement cost.
A young kid comes to work for you out of college today. What do you teach them? This stuff? Like, how do you train someone in this business? Well, I'm catching you off guard. You're not prepared with the questions.
Yeah, but I mean, obviously they can go into property management, which is a good way to get a foundation for the tangible aspects of the real estate, right? You can understand budgets, you can understand how buildings work, and then you can move on from there if you are capable,
property management,
and move into some of the investment side or the development side. A lot of people come in as sort of numbers people. I would say more people on the investment development side.
They crunch your numbers.
They do.
You hand them a piece of property and you say crunch your number.
Yeah, and we give them the stuff. And there's an Argus. There's a software that's pretty easy to figure out.
What's it called?
Argus.
So it's just not Excel?
Well, we take the Argus and it does a lot of work, and then we take all of that output and dump it into an Excel model that's proprietary. Okay. And then we use that to analyze further the deal.
Hopefully it works. Otherwise, your proprietary is worth shit. Did Gary work on that proprietary?
It's proprietary, but everyone uses the same model. It seems to find its way through the market.
Yeah, because everybody leaves other firms and goes, I'm bringing my software.
Exactly.
So Phoenix is, what could go wrong here? What do you worry about?
What I worry about? I worry, obviously there's the geopolitical, there's national, all that stuff.
Does geopolitical factor into local?
Oh yeah, in fact, factors into capital flows big time.
Capital flows, okay.
Yeah, and then tenant growth and all that kind of stuff. Obviously, if they start getting skittish, I mean, our absorption is stellar.
What does that mean?
The amount of square feet getting absorbed by tenants in the marketplace. So it's an unbelievable stat. But Phoenix, we usually last 3 or 4 years in Phoenix, we've absorbed about 6 to 9 million square feet a year of industrial real estate.
That means
net
on
absorption.
The market.
So that's people, that move out of space, and then people that are basically moving into space.
Doesn't
so
mean
net it
anything.
out.
What size? Give me some context for that. Is that big in the country?
Well, so that's what I was going to say.
Okay.
So our first quarter this year, we've done 3 million, which is ahead of pace, and the entire country did 25 million. So Phoenix did 1/8 of the entire absorption for the country for industrial product.
Now, is that because of demographics, or is it just the economy? So that's great.
It's cost.
I mean, I moved back. So I mean,
right.
There's reasons people move back. I never thought I'd move back.
Right, people come here. It's great cost of living. Weather's obviously great. It's cost of doing business.
It's under
excellent.
90 in May right now.
Right.
But this is not normal. But
so so you asked what I worry about.
Yeah.
The thing I don't worry that much about Phoenix unless we get into an oversupply situation.
Okay. We're not close to that.
We're not doing that right now, which is nice. And construction costs have gone up a lot, and land costs have gone up. And it's put a damper. Yeah, it's put a damper on new construction, which actually helps to a certain degree. It makes it hard to develop, but at the same time,
but you're integrated. So
so we're doing some development when we can find the right deals, and we're doing some buying when we can find the right things to buy.
Mm-hmm.
So that helps. The other thing that actually scared the hell out of me last year, which I don't want to get into political stuff, but there was this whole movement with the Invest in Ed stuff where they were going to increase invest in education. Which is we all need to do, and it's great.
Yeah.
Right. But the proposal that was put forth by the National Teachers Union was to increase the personal income tax from 4.5% to 9% for people making over $500,000.
That was a state thing?
It was
local?
It was put on the ballot.
Oh, and I haven't moved here yet.
Maybe
I didn't notice that.
You're right. I don't know. The people didn't really know about it because
I didn't.
It was on the It was going to be on the ballot, and then the state.
This would have been a state increase.
It would have been state if it passed.
Okay.
Which probably would have because 99% of people look at it and go, "That's a great thing. What do I care? It doesn't affect me."
Uh-huh.
But the reality is that would have shut off jobs immediately because all the wealthy California people that want to
pull back.
Yeah, they would have gone to Nevada, or they would have gone to where there's no state income tax, or Texas, or somewhere else. So
that is our competition, lunatic policy. Arizona can only have so much room.
Ducey's done a great job, and he killed this thing, but it may come back. So that's honestly what keeps me up at night. Is that bill?
Fair. Fair. It's selfish, but fair.
And otherwise, it's a supply-demand thing. And right now, demand's definitively there, and supply is staying in check.
Is there another city on your radar?
We love Vegas from an industrial standpoint.
All of Vegas or Las Vegas, the city?
Las Vegas.
Yeah.
North Las Vegas, that's metro area.
So you've done stuff there.
Yeah, we did an industrial deal there that did phenomenally well.
What about Reno?
Reno's doing well. We haven't been
Incline
in Reno.
Village or whatever, but that's just all residential.
And it's smaller,
Yeah.
So we're probably not going to go into Reno. We just opened an office in Southern California in LA.
Oh, but why? Well, LA's booming. I don't mean that,
Right.
but like taxes and aggravation.
Yeah, no, I mean California has a lot of stuff going against it, but we looked at when this bill was coming through, and we're very exposed to Phoenix right now. Let's go to where there's
so like any
one
other
of the biggest
business, you're
markets
just
in the
looking
world.
to diversify.
Yeah, we're looking to diversify. And we found a great guy to run that office, and so
how many people there now?
There's one dude who's out hunting for deals.
That's ViaWest. So what happens if you go east? Do you change your name?
We were talking about that.
Don't let Gary change your name.
Right, exactly. What's the opposite of manifest destiny?
Oh, my Lord. Okay. So Phoenix market. So explain 2008 then here, because I saw it. I was the only guy doing what I was doing, but I was in the Esplanade.
Yeah.
And literally leading up to 2008, I was writing about it. I was like, I was sharing the bathroom with no one. Esplanade was a ghost town because maybe because the rates were so high for what the city was at the time.
Not a great.
And by 2007, it was the building was infiltrated with young, rookie, and old. We're to the commercial age where I could just walk into a meeting with a yellow legal pad and just act, even though I went, and no one questioned me. I was an agent. I could have done deals.
Right.
I saw it coming, but tell me how it was for you and what really happened, and could it happen again? It's a lot to unpack there.
Yeah, I mean, looking back, it's sort of crazy that we didn't see it coming even more than we did.
Right? Like why? I did.
Yeah, what we knew is we were making offers on buildings in 2007.
ViaWest.
Yeah. And we were coming in 30th out of 31 offers. Right?
So that's a sign.
Yeah, so we were like, something's challenging here. So we slowed down, fortunately. But, we should have just gone out and sold everything for whatever we could get for
Meaning
it.
if you're 30 to 31, do the opposite.
Yeah.
Meaning don't just not buy. Sell.
Get the hell out, right?
Or just there's so much demand, just sell.
Right. Our company was young, and we weren't in a position, so you got to look at situational stuff.
I'm not judging. We're trying to learn.
So we in retrospect obviously should have just sold everything, right?
But that's a good sign.
We sold some stuff. And so that worked out well. And and then the market went off a cliff, literally. I mean, it just turned off.
Do you remember what was the one thing when you just started getting nervous? I'm watching the stock market, so I could feel it. But what did you?
I mean, it was probably it was late. It was later than you would have wanted.
So it was 2009, or
when
was
I
it
really
late
got
2008?
nervous was probably late 2008. Yeah.
Okay. And do you
when
remember
did
what
Lehman
it was?
go under? When was that? Was that?
That might have been
fall
07.
I think it was fall of 2008.
Okay.
I think
Stearns might have been first. You're right. It was September 2008.
Yeah, and I think that's when we were just like, oh. Can I cuss on this?
Yeah. If you don't,
if I'm with Howard, I can't.
You're not going to do business.
Yeah, we were like, oh shit, right? They're like this is deep.
Yeah.
And there's
nothing you can do. Nothing's liquid. So
everything was a liquid, and the banks. I mean, it got really goofy. I was just talking about this the other day. I mean, the banks literally became. At first, they were. When you're dealing with a bank, you assume they don't want the property back, so you go negotiate. How do you keep the property, and how do you work together to do that? Yeah. Because of the FDIC put in this thing called the loss sharing program, where if the
when did they do that?
God, I don't remember.
Not in a way.
It was pretty early though. It was probably 2009.
And what does that mean?
Basically, if a bank lost money on a real estate deal, the FDIC would cover it.
Well, that's nice.
Isn't that nice? Unless you're a guy who has a loan.
Plus, they had TARP.
Yeah.
Where's that TARP?
That TARP was a little bit later, I think.
But TARP's the same thing, or even different?
TARP was a little different. Yeah, this was specific to
that's
loans.
Cheating.
It was totally cheating. So we had loans where we literally had some vacancy, and our loan was coming up, it was maturing, and we personally guaranteed it, and we had tenants to fill the building, and we sent to the lender to get approved, but it's because they didn't meet the specific criteria because the market had softened.
Yeah, they changed the goal line,
and they said we're not approving the deal. Oof. So, and we're going to take back the property. And then we're going to chase you for your personal guarantee. Oh. And whatever we can't get from you, we'll get from the feds.
I would assume this was going to happen to me with your building in 2001. But you were
Right.
got to be different. This is different because it's a world crisis.
Yeah, and there was nothing. There was
nowhere to
no other
hide.
bank you could go to. You couldn't recap it because they didn't want you to, because that would just be kicking the can.
And
so they actually were motivated to take back the property.
What do you learn from that in hindsight? And so you had to negotiate your way out of that and fight?
We when we could, we would negotiate our way out of it, and then we would try to. And we ended up, fortunately, it was brutal. It was brutal, and we did pull every angle, and we worked our tails off, and we muscled through it.
Yeah.
We lost a couple of deals, and we had to, do a few things with the banks to get them comfortable. But fortunately for us, we had basically cleared our entire slate in 2009, probably late 2009, and we either had assets that were totally stabilized and in good shape with good debt on it longer term, or we had, moved them, or they had already gone, a couple went back to the bank, and then we refocused and we looked for opportunities. So we were able to really build our business. I mean, we were rooting, softly, maybe, for a downturn in 2006, 2007, because we were priced out of the market.
Yeah.
And we're priced out of the market.
Yeah.
But we didn't expect it to be quite as deep and as hard as it was. And, but we must.
And what turned it to the upside again? What, just the panic?
Phoenix was late to come back.
I still think we haven't.
Yeah, really? Have you been to you were just
Well,
on
I want
Stake
to talk
44.
about that.
Have you been to Stake 44 lately?
But we'll talk about all that. But meaning in terms of, I bought a home
for
for 400 and something a square foot
Right.
in like what I would consider.
Right.
I'm not saying it should be 1,000 a foot, but it could easily be 600-700 a foot.
Yeah. No, you're right. From that standpoint,
So
Phoenix
I
is not
feel like
completely
it has not.
Right.
It still feels like a farm city in that way. Is that like people haven't? It's so big and so sprawling and so, like you maybe say now, diversified. There's opportunity.
Yeah.
But a lot of shit is crazy too. So what in 2010? When did it really turn? And you're like, I should have been buying more, or
we started doing smaller. You couldn't get your arms around the market in 2009, 2010
because of the banks.
It was just choppy. Like, you didn't know if tenants were really coming. You didn't know where Phoenix was really going. Some people were like, Phoenix is never coming back. Like, it's a wasteland. It doesn't, it's not diversified.
I made those jokes.
Right.
I left.
Right. And so that was a legitimate concern. I didn't believe that, and the whole millennial thing, that they're never moving into a house again. And,
that's a big lie.
Like, generally speaking, I didn't buy into a lot of the noise, but capital wasn't possible to come by. I mean, and that's really what we started working on, is like, we want to have capital because nobody else has it. So let's figure out how we get it.
Good. So that was the move.
So we went to Canada because Canada was doing well, and met with pension funds in Canada trying to raise money. We went to New York.
You and Gary just went on the road.
Yeah, we just went on the road and tried to raise money. And we weren't overly successful. Like,
But you put in the miles.
But we found enough to do some deals. They were smaller deals, and then we kind of started ramping up. But probably about, I think in 2011 is when we were, just like, not buy everything we can get our hands on, but pretty close to.
I give you guys credit. And Gary was in the bottom there buying a lot of REITs and stocks.
Yeah, so we
Gary
actually
did well himself too.
We actually did something which I'd say very few companies like us are even in a situation to do. But I was in Las Vegas at a meeting with a bunch of C-suite people from all the big REITs in the country.
Yeah,
and they were all talking about how mispriced their stocks were. And Gary,
I remember Gary
used to work at a hedge fund.
Yeah.
So I called Gary. I'm like, I think we need to open a little hedge fund here and start buying the publicly traded REITs. We decided to buy the preferred shares instead of the common shares because it seemed to be a little less risky. And we went. There was companies like Public Storage.
I remember
that got
pitching
hammered, and they had no debt.
Yeah.
Like, they had no debt. People were still using mini storage. So there were some great buys out there that you could buy for 50 cents on the dollar.
I was like out of the business at that time doing startups. I should have. You guys killed
it. The problem was we should have raised $100 million.
Everybody has that problem,
right?
But you've built a reputation. Look how you've hit the pinnacle. You're on Lindzanity. You've hit the local Central Phoenix top of the food chain.
There we go. I'm retiring. I'm out.
So you guys are a good partnership. Tell me. And now I get a good picture of Phoenix. We're diversified. Rates are low. You've got Scottsdale, Tempe, Phoenix. Good infrastructure. I don't love the infrastructure, but it's good.
Yeah, no, Phoenix
is good when I need it.
Yeah.
WeWork.
Yeah, interesting.
Did 08 bring WeWork? Like, whether they understand it or not, was like 08 brought Bitcoin in many ways, decentralization and currency.
That's a good question. I'm trying.
Do you remember the first time you heard about WeWork, and did you dismiss it the first time you heard about it?
I don't think I dismissed it. I don't remember exactly when I heard about it first. I don't think I dismissed it. I got the concept and it makes some sense. I mean, the issue we have, and it's what's keeping office from being the most desired asset class, right? Is every time a tenant leaves, we're spending a bunch of money to re-tenant their space. We're paying a bunch of lease commissions. We have downtime because it's got to be the right size and all this different stuff. And they're definitively filling a gap, like that.
Definitively, I've never. It's the fattest hole I've ever seen.
Yeah,
and demographic,
and it makes all the sense in the world. The problem is the capital looking to buy office won't give you any credit for a lease that's got a month left on it, right?
One more time.
The capital that's buying office space doesn't give credit to like the purchase price. They won't they won't believe that purchase price should incorporate a deal that's expiring in a month.
I get that.
Right?
You would be the same way.
Yeah.
Okay.
But if you have it set up that there's a revolving door and just because someone leaves that month, someone else is going to step in the next day, it should get credit, right? Mm-hmm. So, but the capital still isn't even there. Like if we have a suite in our building and we got a lease that comes up in, we're selling Biltmore Center actually right now.
I understand.
It's on the market.
Okay.
And so we got 4 or 5 tenants coming up in 2020 or late 19, and they're like, what's going on with these tenants? Because if they're not renewed, we're not going to give you full credit for them.
Right.
Even if so the idea of having space that's furnished, that's ready to go, that has sort of residual use where the next tenant can come in and actually use it and appreciate it is absolutely brilliant, right?
But is there math that WeWork would buy your building? Is there a math
No.
that where you would make money? No.
That WeWork could buy our building?
That where you could make money. Obviously, WeWork at some price would buy your building.
We're copying. We have some suites that we'll go ahead and
It's called Workuity.
Well, they're copying them. That's a tenant who's basically copying WeWork,
okay.
Right? We're taking spaces in our own buildings, putting in 1,500 feet, fully furnishing it, and telling someone
you could
instead
have
of it
6
being
months?
$30 a foot, it's $40 a foot because you got furniture and you come in and lease it for a month if you want. Right?
I love that idea.
It doesn't have.
I don't know if that mathematically works.
It works. Well, it works a hell of a lot better than WeWork does because
I
WeWork
would
will
use
come
that.
pay us $40 a foot, right? Because they want a big tenant improvement, and then they go lease it out to the same person for $70, right? Mm-hmm. So we're actually. I do think the office space will evolve to that in time, where there's going to be a component of it that the landlords themselves have that's flexible space that they're actually running and operating. The piece that, and this is where the evolution's coming, the piece that doesn't happen right now when we do it is the whole hospitality element that WeWork does, right? You get your coffee and your donuts and you have your little concierge or whatever it is. We don't have
the ability. You don't have the scale.
We're not structured to do that right now.
Yeah.
What WeWork's competitors are doing, like there's
give me an example.
Industrious.
Industrious doing a good job.
Yeah. Common Ground, something like
but
Common
even
Ground
just Industrious.
Yeah. They're coming in and partnering with
love
the landlord.
what they did at Fashion Square.
Yeah, very
love
cool,
it.
right?
Love what they did.
So they're trying to come in and basically say, hey, Mr. Landlord, I'll provide this hospitality element. You go build out a bunch of spaces. So
they do even specialer deals like that.
Yeah, I'll partner with you. I'll have my own space where I can deal with all the, with people. But if you want to go do it, and I'll manage your property and I'll bring hospitality to your entire complex, which makes a lot of sense.
It's big vision.
And especially, look, we got a bunch of assets in town, right? We're located in Biltmore Center. Yeah. So we sit there all the time and think about what can we do at Biltmore Center. We got mobile car wash. We got the Shoe Shine guy. We brought in Press Coffee. We got our tenant lounge.
And you're even thinking about a podcast studio.
Exactly. We're thinking about some sound studio. Yeah. So we got a bunch of properties. We're not in every day. They're not as top in mind, right?
Yeah.
And to have somebody else that is thinking hospitality that's located there that can actually make it work.
So it's good innovation coming.
It's great innovation. Personally, if you ask me the valuation of WeWork, I think it's a little crazy.
That's not.
And in a downturn, I'm not sure what happens as much when they're not running at 99.9% occupancy, and when their TI all of a sudden isn't cool anymore.
But someone would come and redo the business. If WeWork goes, it doesn't go away. Someone new WeWork evolves. It's betterly funded.
Right. The issue is just the margin, structure. Right?
Yeah. The issue is WeWork.
Right.
WeWork disappears tomorrow. There's a new WeWork. It's either Industrious or another one that just has a better cap table and does it better.
Right.
Just not as silly.
Right.
So that's what's cool about WeWork. Everybody's like, oh, WeWork's overvalued. They don't understand that WeWork, even if it went to zero and $25 billion was vanished from cap tables, a $20 billion version would surface in the next 2 years, better structured.
Possibly, right.
Well, they'd have to because they would just do the math better.
Right.
So you consider them, so they're forcing you to innovate, or are they good for the industry, or are they...
Look, I think they're great for the industry. I think we got another 5 years till sort of the capital really wakes up to... So this is what's interesting, right? When we're dealing with real time. Mm-hmm. We have a tenant, big Silicon Valley, based deal, who has an office in one of our
buildings. Company. It's a Peter Thiel company, right?
No, different one.
Okay.
And they are deciding whether... So WeWork's opening up downtown. And they're talking about moving...
Like that. But go ahead.
Into WeWork downtown. Uh-huh. And they're doing this across the country. They're moving all their space into WeWorks. Right?
Oh, got it.
So they have a space in our building. Their lease is coming up. They're talking about moving to WeWork.
Okay.
The local people want to stay in our building.
Of course.
Right?
It's the best building and it's the best location.
Well, no. This is downtown.
Oh.
But it's still the best building and best location.
Okay. Is this the Arizona Republic one?
No, this is 111 West Monroe. The Monroe, Monroe.
Okay.
You should go see it. It's freaking awesome. We did some totally cool stuff in there.
If I live in Phoenix 3 more years, I'll make it down there.
Exactly. I'll take you down. We'll go to lunch. So they're trying to decide. And so what's happening is with tenants like that, the corporate is saying on one side, and this can be the same. We're going to go to WeWork so we can have all this flexibility. We'll take whatever space they give us and whatever it looks like, and we'll sign a deal and we'll pay sort of above market for all this flexibility, and we'll go sign it, for 6 months or month to month or whatever it is. On the flip side, which we're also dealing with real time, you got groups that are coming in and saying, we have a corporate mandate of what our office space needs to look like.
Yeah.
And I know you have a spec suite you just did that you totally decked out. It looks awesome. It's totally, spec suite is when we go ahead and finish it without a tenant in tow. And it's dialed in and it's freaking great, but you have all the offices on the perimeter on the glass, and our corporate mandate says they need to be on the interior and the cubes need to go on the glass. So rip it all out, move it over. We want to sign a 5-year deal. I know it's going to cost you $40 a foot to do this, so you already put $40 into it, but that's our corporate mandate.
Ooh.
Two totally right?
Yeah.
Two totally different scenarios where one's like, I don't give a rat's ass what the TI is. I want the flexibility and I'll pay a premium for it. To corporate mandate says, it's got to look like this and we won't go in the space unless it does.
Whew.
So those two worlds need to merge, basically, right?
And how does that merge? Just through technology?
Through corporate America waking up and going, we can't, it probably means partially their bottom line to a degree, and their
so that'll happen then,
right? So I think they're in some same companies have a corporate mandate if they're not going into WeWork, but if they go into WeWork, they're throwing their corporate mandate out the window. Crazy. So it's just sort of an evolution because WeWork's new, right? And the capital hasn't kind of gotten there either. So I think over the next 5 years, it will completely this sort of two worlds are going to merge, and landlords will start doing sort of fully furnished spec suites.
That brings down the price of buildings in the long run.
It will. Well, what it should actually do is increase the value of the building because the landlord's not going to have to reinvent. You may not have stickier tenants, but you'll have more tenants okay with coming into space that they don't have to spend $50 a foot.
Generationally accepted.
Yeah. And they're not going to have to come in, and every time they leave, the landlord's not going to have to spend $50 a foot to re-tenant it, right? And
so
this is
This is technology kind of changing your business too.
For sure.
Okay.
Big time.
And software matters too. Not just your crazy fake algorithms in the Excel, but like software in terms of making sure you understand where the trends are, people are moving, and where to buy.
Yeah. We've incorporated a ton of software in our business
do an amazing
last year.
job. Yeah. So cap rates. I literally don't know what I mean. For years I just accept that people talk about cap rates in front of me, and I shake my head. What the hell?
That's people how I am listening about put options and stuff like that.
So because I literally don't understand what cap rate is.
Cap rate it's pretty simple. It's the return you're getting on your investment, basically. So it's your income, basically divided
on the building
of your building divided by the purchase price, right? So if I'm buying something for $1 million and I get $60,000 a year, I have a 6% cap rate.
And so where do you want the cap rate to be when you buy?
I want a higher cap rate when I buy, and I want a lower one when I sell.
Yeah.
Right.
But cap rates now are like 2. No. So how do you make money?
Not quite. But
what's the like?
Well, it depends. So apartments.
You would never buy something at a 2 cap rate.
Well, what's the point of buying something at a 2 cap?
That's what I get.
Right?
I don't get it. Right. I hear that. I hear people talking.
But apartments
about that.
are selling it look, and if you go into Silicon Valley or Northern California and look at apartments, there probably are 3%. They're probably 3 caps.
I don't get it.
But Phoenix apartments are they're low 4s.
And And you were not scared of that?
No, I'm not buying apartments.
Yeah.
I am scared of it.
Yeah.
We're not buying. Look, I mean, we're still trying to get double-digit type returns, right?
I would think.
Right. I mean, we're so.
I literally hear this all the time. 3-4 cap rates.
No, it's crazy. It's crazy.
That's like paying 3,000 PE. Like,
right.
I don't get
well,
it.
And I mean, maybe if you can really,
No, but they're illiquid. It's not a stock where I can flip it the next day if I change my mind for zero commission. You guys have real.
Right.
You're into this.
Yeah, and you can have. I mean, things can ebb and flow, right? Stock.
Yeah.
The tenants can leave, and so I mean, we're seeing it's all really all over the place depending on the asset. Industrial, really good assets are probably 5.25.
But with that, you get long-term tenants too.
Sometimes, but some of these are multi-tenant, like 5-year type stuff.
Okay.
If you were to buy an Amazon deal with 10 years in there, it's going to be sub 5.
And interest rates. Do you watch them or do you care?
Yeah. I mean, look, we watch them. I'm the first to tell you, I have no idea what's going to happen with interest rates. We watch them, but we listen to economists all the time, and one will come out and tell you one thing, and the next guy will come out, and they're both world renowned, and they say the exact opposite. So, we definitely take it into account. We build into our models a bunch of sensitivities with interest rates and where the yield curve is going and all that kind of stuff. But we definitely watch them, but we're not trying to predict them.
Okay, and then opportunity zones. And what does it mean? I know your partner's into it. Are you following what's going on?
Oh, yeah. No,
what is an opportunity zone and what?
So opportunity zone was put in place when the feds redid tax code in the beginning of, what year are we in?
17, 16?
It was the 17 tax code, but I think it got incorporated in January of 18, right?
Okay.
So it basically, you can sell any asset. It can be stocks, bonds, operating companies, real estate, anything.
Uh-huh.
You can take that gain and invest it in we'll talk real estate for a second. You can also do it in a business, but I don't know as much about that in and of it. But you invest in real estate that's in an opportunity zone. So each state designated a bunch of different land.
How did that get? Is that just somebody who's friends with the governor?
It's interesting. Someone just told me last night, Forest Highlands is an opportunity zone.
Lord. That's what I'm saying.
I haven't verified that, so I'm not.
No, but I know what you're saying.
Downtown Scottsdale is. Okay.
That's a good opportunity
right.
zone.
Downtown
Indeed,
Phoenix
that's where all the big companies are moving.
Yeah.
Like the new tech companies.
Yeah,
like
it's great real estate. It's unbelievable.
So hang on, downtown Scottsdale?
Yeah. The idea
all
was
the way to McDowell, or what's downtown Scottsdale? Camelback to
Indian
Thomas?
School. Yeah, it probably runs from McDowell up to Camelback would be my guess. Something like that from, just...
Okay, by the way, McDowell needed to be that, but...
McDowell does, right? But,
but
Camelback, Fashion Square doesn't really need it, right?
But that's an interesting thing.
Right. The concept is to help blighted areas, but there was a formula that was used about housing. But around downtown Scottsdale, there's some housing that's not as nice, right? And there's some median income levels that aren't as...
Over to Miller and Hayden,
right.
All the way there?
Right,
okay.
So you're able to use that, and there's some distance that... I don't know how the exact locations got determined, but each state, the governor would then basically approve them, and then they would submit to the feds, and the feds would approve it. So there's all this land now in every state that fits an opportunity zone, and some of it's really good in land, but also that makes sense to try to get developed. So so you can take your gain and invest it in real estate within an opportunity zone, and you defer your capital gain tax.
It's genius.
For either 5 or 7 years, but so say it's 7 years, and then you get a reduction in your deferred tax by if it's 7 years, 15%, and then any gain you make on that gain,
you can roll.
If you sell after 10 years, is tax free.
So that's going to lead to some great development.
So we're
that
doing,
actually could work.
It works well.
There'll be unintended circumstances, but I like that idea.
Yeah,
especially in Scottsdale.
Oh yeah, it's great. So we have 2 industrial sites by the
you already
airport.
did it.
Yeah, which are great industrial locations, and they're opportunity zone. So we're proceeding with developing.
And is everything?
There's a bunch of rules and regulations to it that make it
incredibly
complex.
Yeah.
But you have to double your investment within 30 months.
So you have to spend money.
So it has to be really a development or redevelopment.
You
can't just go acquire a building
and sit on it,
right?
And be a slumlord,
right?
So Trump didn't read the fine print when he accepted that. So we got one political thing in. He obviously didn't read the fine print, but that's a good thing. You can't just sit on it.
No, the idea wasn't to just go move money around and stay tax-free. It's really
I'm skeptical, but that's pretty cool.
Areas.
So I want to do one in Scottsdale. Are you guys looking? But everything's priced up already?
Yeah, well, what's interesting is we have some land that ended up being in the opportunity zone, and the land across the street isn't.
So you just got lucky.
So
you
yeah,
woke up one
all
day
of a
and
sudden
you're
their
like,
land's worth less and ours is worth more.
so that's luck.
stuff,
But I'm
right.
saying, so that was just random.
Yeah.
And how do one go about finding about opportunity? Is there like a website that like?
There's a lot of info out there. I mean, what I would,
What do you read and who do you trust?
we have an attorney who's become a local, locally, who's
Okay.
become the sort of local expert in it. We belong to this group that's been there's still a lot that hasn't come out from the Treasury about compliance and exactly what everything means. So we joined this group and we're on calls with them every week and all that kind of stuff. It's an Novogradac accounting group nationally. Okay. So, we stay very in tune to it. And, I mean, it's an interesting thing. And a lot of we have a lot of private investors in some of our deals, and some of them don't care, and some of them freaking love it.
Yeah, I think I love it. Well, it feels like VC meets real estate. It's because you're forced to spend money. You got to really think ahead. That is an interesting area. I'm not into real estate, but that's kind of interesting.
Yeah.
You invest with me, so you're an LP&R fund. How does people invest with you? Do you take outside money?
We take outside money, so we have private investors and
all accredited type.
Yeah, all accredited, and we also have institutional partners.
Yeah.
So if it's a big deal, we'll team up with a pension fund or
you have a list. Okay, he gets in on this deal. Like we used to do that, and I hated it.
Yeah,
that's
we
why we have
try
a
not
fund.
to cherry pick. We try. So that's why what we started doing. It's hard. From that standpoint, and so we try to top grade. We basically just try not to take smaller investments, and that's enabled.
So that's
us
called
to,
top grading.
That's what I call it. I don't know what do you want to call it.
I don't know.
I don't mean not as a dig. Not as dig to the little guy that's giving us $50,000, but we don't want him anymore.
In my business, sometimes the $50,000 guy knows the most. So it's different than yours.
Yeah.
You're taking $50,000 doesn't move the needle for deals you're doing, whereas the right $50,000 in a company can help our companies.
Yeah, for sure. Yeah, I mean, and we're No,
so you'll do deal by deal, but do you have funds as well or no?
We have done some funds,
but you're not
right now. We're
ViaWest
not.
Is
the
not
challenge
a fund.
with the challenge with funds right now is you got to put the money out, and we don't feel like it's an environment where
Absolutely.
there's a slew of great deals.
Yeah,
so we'd rather
and you
just
don't
do
need
one-off.
the fees. So
right,
yeah. Okay.
I mean, I like the fees, but we have other ways.
No, I understand. But you have figured out other ways to do the business, and you've seen 2008.
Right.
And so, are anybody kids interested in this business or no?
Well, I got one freshman in college and two in high school.
Did he ever show an interest in this?
None of them have. My daughters tell me absolutely not. One's going to be on Broadway, and the others are going to be writing books, and they have no interest. My son actually just working for a real estate company this summer.
Here in town?
Yeah, literally next door to our
So
space.
is Ruben. Which company?
Strategic Office Partners.
Yeah.
They
Ruben's working for a big company here. I forget. I bet you got him. I don't remember. I just don't know your space. So he's going to come back. He's here. Is he back? Is he finished?
He's back for the summer. Yeah.
Where's he golfing?
Gainey? Good question.
He's giving it up?
No. Hell no. He hasn't given it up. He's playing Gainey right now.
Yeah.
Yeah.
Okay. So he's working all summer here.
Yeah.
So if you are, I would say this. Listen, I'm not a real estate person, and I lost a lot of money in 2008, even though I'm not in real estate.
Right.
Just because the boom went on so long. But you guys have a great reputation, been in town. And good friends. So, for my listeners, people can just reach out to me and I'll refer them to you.
Sure. Yeah.
To end it, is there kind of on the side? What do you do for investing, or is it all real
for
estate?
investing? Real estate, because we obviously in our own deals. We don't do multifamily, so there's a group I like that does multifamily that I invest with. I do some private equity stuff with some. I've kind of gotten out of investing in a specific company, so I'd rather give money to a guru.
Yeah,
Howard's a guru, by the way.
No.
So for tech investing,
but we talk about other names that you.
And so
that
combination. I try to diversify it: private equity, tech, real estate.
But you don't do stocks.
I have a portfolio that I've had for.
But you don't
a while,
follow
and
it.
I was trading it myself, sort of, and not really paying attention. So
we
I'm
talked about that.
Moving it over.
Yep.
Yeah, but not a lot of stock. I'm not. Yeah.
And are you hiring?
Yeah, we're pretty good right now. We've been hiring like crazy. We got probably one spot we're hiring right now.
Yeah.
And but it's been a pretty.
In the industry, is there any shortcuts to get to your, or you got to get your ass handed to you and know the lay of the land?
And
like
for an individual getting into it?
Yeah. Is there something that they have? Engineering came out of the blue,
right,
and changed Silicon Valley. Is there anything, or you just got to know the neighborhood and understand?
Look, there's picking the right product type is, finding what's the hot stuff is, it's lucky and maybe smart.
Okay.
I mean, there's a young lady, maybe she's not so young now, but she was pretty young. I think she, back in 2010, she borrowed $10,000 from her dad and to buy a duplex and turn it in, and she just recapped her portfolio for over $200 million in 9 years. So
starting with one duplex.
Yeah, in 9 years. But she was in multifamily, which was went long, and it's a great product type, right? Yep. It's gotten pricey, and so now it's harder to do. But
and that's apartments is multifamily?
Yeah.
Okay.
Yeah, sorry. Yeah. So, no, I mean, look, I don't think there's any shortcuts, but there's people that just kind of see an opportunity and get aggressive, and, it's like anything. It's up to the individual.
And do you have your license, too?
Yeah.
So everybody in the company has to have a license?
We don't have to, but we generally do, just to avoid any issues.
All right. Well, thanks. I learned a lot, so I was just asking questions for myself, so I appreciate it.
Yeah,
everybody.
For sure.
Thanks for being on.
My pleasure, man.
All right.
Enjoyed it.
All right.